Welcome. Thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel, day trading for an ROI payout. It's just my trade journal market analysis for Tuesday, October 17, 2023. Rule-based price action trading is what I do, but before I trade, I've got to have some analysis behind it. Daily affirmation, I see it and understand. Rigid discipline and rules, flexible in outcome expectations, independent thinker, impeccable risk manager, precision-based trader, responsible business manager. So we do have 8:30 a.m. Eastern Standard News catalysts. So we've got retail sales coming out. So that's important. On the left, we've got the E-mini 24-hour. You can see that we've got a current black candle retracing some of this big Monday. Mondays don't usually have an expanded range, but we had 60 handles. 3-day average has been 67, but again, it was very one directional and almost pure green solid right from the get-go, from the open. So I'm going to point out the levels on the E-mini, but the dollar, in my opinion, is going to go now up, and I've got, again, a chart showing the level on what it respected. So to me, price is all about respect or disrespect of certain price action imbalances or relative equal lows or highs. So I want to just chart this out. Let's go to the next chart and start with the dollar. Okay, so the dollar, my narrative basically on my analysis is showing this daily fair value gap in yellow. And notice Monday, we respected the red line, that is the consequent encroachment. We did not close below it. We came darn near it, but currently we're above the fair value gap. And my point was this was respect of this fair value gap. Again, if you look at bond rates right now on treasuries, yields are not going down. So if yields were going down, I would say, okay, we don't have the underpinnings behind the US dollar, but yields are up. Yields continued to be near all-time highs for 2023. Of course, that's going to support a higher dollar. If we've got a higher dollar, then to me that's risk off, which means the E-mini analysis could have seen the highs for the week already on Monday. I'm just saying. Let's go to the E-mini next. E-mini 24-hour chart. So I want to bring you back to where we were on the CPI number, on that pre-CPI Globex high here. That was 44.30.50. So the high as of yesterday was just about 44.14.25 right here. So we did not go and retest the high of last week, but that was a solid candle. What I'm looking at is this yellow rectangle that I'm going to keep on my chart for at least 2 more days, if not 3, just because this was the RTH time zone Monday, the RTH open range gap. In other words, where we closed on Friday and where we OPH was a huge gap up. So I'm going to pay attention to for the rest of the week to see if we can come back and at least tag that. The open for the prior day was 43.80.25, and I'm going to open this up so we can see the levels for Tuesday. New York midnight open is 43.95.75. London comes in at 43.94.25, and we've already had a London raid low, 43.87.50. So what I want to say about prior day low, we did have at 1:25 in the afternoon a low at 43.85.50, and then that's real close in the neighborhood zip code of a 50% equilibrium at 43.84.75. So again, about a 60 handle range on Monday, all directionally one way, big green outside block compared to Friday. And now here we are on Tuesday, and the question is, are we going to go down to the 50% or the low? of 1:25 p.m. prior day. If we do break those lows, then again, I'm looking to tag back that RTH open and maybe dig into this yellow rectangle box. We'll see how it goes. Again, we've got to watch global events too, because anything that's highly volatile right now. Anything can happen. But I just wanted to point out these are the main levels here. Way down here, we've got a new week open gap here on October 16th. I pointed that out in the prior video. On the high, and the low is 43.51.50. One more chart on the E-mini and we'll wrap it. Okay, this is a ES micro chart, and what I've got is this blue on the left 4-hour chart, because this blue box is the 4-hour fair value gap. So this, for me, is what's going to be respected or disrespected. So I'm just noting here, we've got a candle wick, but notice how the bottom of this 4-hour bar is inside of the blue. On the right side, you can see here, we've got the 5-minute chart, and the 5-minute chart is basically showing, again, we came out of this silver bullet London range above the blue box, then we go after it, below it, into the London raid low at 43.80, and again, I'm looking for that 1:25 p.m. prior day low to be hit right around 43.85.75, call it 43.86 and a quarter. So we'll see how the news goes, but these are the levels that I'm looking at right now. Again, because of the dollar, because of where rates are, because we had such a bullish Monday, I'm not buying them, that's for darn sure. But I am going to be patient and wait for the appropriate time of day when I'm in front of the charts and operating my trade model. Take care. Aloha. Thanks for watching. And don't forget the like button. Thank you.